What's good, everybody? Welcome back to another trade recap. I'm super excited to go over today's price action. Today was one of my best trading days. It was super simple, just following the system was a plan of action. No secrets, no extra nothing. It was a day that I watched and reacted to price. I didn't predict. My initial bias going into the day was wrong, but I was still able to eat and take slices from the market. That's why we react. We don't predict, we react, because the market's constantly feeding us new info, and it's our job to take that in and develop an educated opinion on where we think the market might go, and then wait to insert our system to take us to that drawn liquidity. That's really our job as traders. So without further ado, let's just get into this trade recap. All right, boys, let's get it. So first of all, let's mark out where we started, and let's go over the entire range going into the day and what we thought was going to happen. What happened today was pretty interesting, why this morning action was so shit right here, and then let's just continue into how I ended up banging out two nice trades today. So zooming out, right, we have to look at this narrative of price, right? This last week, we completely dumped and manipulated, ran all of this liquidity. Now the market has nothing to draw towards. After dumping this much, maybe we have equilibrium of this range. Okay, we hit that, now what? We've left imbalances. There's really nowhere for the market to draw towards. There's no clean resting highs, resting lows, great liquidity targets, clean generated liquidity that the market can draw towards, right? Because right now we need to generate more liquidity right here. If we look right here, what are we doing? We're generating more liquidity for the market to go ahead and run later. And it's not a fact of if we're going to do it, it's a fact that we're going to, because if you look, all of this generated liquidity eventually gets ran. We generated this, we will eventually come run this. We eventually ran all of this, we ran all of this, we will come run this liquidity. And it is not a question of if, it is a question of when, right? So we need to wait until the market shows us when, right? But until then, we have to watch what the market's doing, right? So opening the day like this, we had no bias, right? Looking at the chart right here, we're in the middle of a range. We're in the middle of this range, we're in the middle of this smaller range right here. There's no bias. It's simply watch, react, predict, right? Or watch, react, not predict, right? So the only thing we had was this SMT, which puts us with a little bit of bearish confluence as well, because it's within a fair value gap, it's within a equilibrium range. We're looking to potentially see this play us to the downside. However, I did not like that, because if we look right here, we also have that 1 hour fair value gap that's sitting somewhere right about here. So I'll just draw this in, 15-minute chart. All the imbalance price action is about here, right? So just drawing this in, drawing it over here on NQ the exact same way, right about here, right? So if we look right in that imbalance, we had an SMT. So we know, and we had a 3 jobs pattern, right? But that was a little after open. So we know that the market is going to put SMTs in and manipulate in those areas at a point at which we expect to potentially reject, right? So even if we don't expect to reject and we see an SMT, we have to ask ourselves, why is the SMT going here? And since the SMT is happening here, is this an area in which price action could potentially reject off of and reverse the other way, right? So looking at this area, we put in an SMT right here, right? So we put an SMT in this area. What is the area? Well, it's a 1 hour for value gap. And if price wants to hold bullish like it did in the overnight session, now, doesn't that tell us that we're manipulating that for value gap to give us some kind of entry to go long, right? It could potentially. However, look at this 15-minute. This could also be a clean downside model, and that manipulation could be just to go soup this internal high to then go ahead and distribute us back to the downside to go take this internal low right here, right? So what we're doing is simply watching. We're simply watching, because I don't know what the market's going to do. I'm simply watching, right? So going into the day, the gun to my gun to my head bias was right here. I want to see a manipulation at the high like we saw, a change in the state, and then a push lower, and I thought we were gonna get some kind of clean action, right? However, I didn't like that for value gap. I was watching that, right? So looking at what I did, right? Market opens, we see NQ already at these highs, right? It literally comes, and within the first minutes of open, we start to completely manipulate these highs, right? So we go ahead, we manipulate these highs right on open, sweeping that liquidity, and then NQ over here does not take anything, right? So that same exact point at this point right here. So yeah, we did not go ahead and take anything. In fact, we were looking super weak on ES, right? So ES at the bottom of its range, NQ is at the top of its range. We could potentially see ES wanting to sell, right? But just waiting until NQ takes that high to then go push low, right? So I'm just watching. If ES is going to sell, what am I going to see? I'm going to see a 5-minute change of the state like I saw right here. And I know it's a stubby one, but it still counts, right? Then what I'm going to see is I'm going to be able to zoom into the 30-second. I'm then going to be able to look for some kind of internal model that plays out on the 5-second that is in line with this bias that I'm looking at right here, right? So we had our change of the state right here. Then I should be able to zoom into the 30-second and the 5-second and see some kind of model that looks like this, where I see generated liquidity up to these highs, a manipulation, and a go, right? That's what I should be seeing. I know it's dirty, but just bear with me, right? That's what I should be seeing. Did I see any of that? Not really, right? I didn't see anything that I really wanted to see after we got the change of the state, which would be right here. So it was on this candle, right? So after this candle dumps, gives us change of the state, we don't see any entry opportunity. In this opportunity right here, after this change of the state, it doesn't really look like a manipulation to me. And I can tell just from market experience and also from looking at this and saying, if I was to take this on the change of the state, I would put my entry here, stop here, take profit here, and look at the R that I would get, bro. Like, I don't even want to trade it, even if it does play out, right? So I'm completely detached from that outcome. I don't care about that until the market gives me structure to validate it, right? So now I'm also looking, and I'm not just married to that short bias because I got a small little stubby 5-minute change of the state. I'm watching price action. So looking, 2 candles after that, we get a change of the state to the upside, all right? What does that mean? I'm still looking bearish, right? I haven't seen anything that really tells me, okay, we want to be bullish, and anything that I do see, I don't really see great targets to go be bullish, right? So I'm looking at it, I'm just not really sure about anything, right, yet. So looking, we go ahead and we manipulate these highs once again, and then we get a change of the state to the downside. This is where I was looking to take a short on NQ. I'm just going to be completely honest. We had SMT at these highs, displacement 5-minute change of the state. I want to see pull back to equilibrium of this range into the change of the state, into a fair value gap. And then I was looking to take some kind of 15-second, 30-second short, right? That's my model bread and butter, right? So looking in, let's look, 15-second. What does this end up doing? We see change in the state right here. We see a little bit of displacement fake out right at that equilibrium mark. However, there is no change to the state. There's no entry. And right here, this is the same problem we were going with earlier, where we see the change of the state on this leg right here. And if we look on ES, we even saw it here too. However, say you take that trade just off that change of the state. Look at your R. That's not even a trade I want to be taking anyways. And especially for me, the way that I trade is I wait for change of the state candle to get put in. I wait for a whole ass another candle in the other direction until I'm like, the market is moving weightlessly in that direction. It's moving with low resistance. It's moving low resistantly in that direction. If it wants to pull back, get a little bit heavy, and then tap to blast me off, that's where I want to get my entry. But I want to wait till the market shows me how weightless it's moving. Then I want to see a slow move back, that baby tap, and that blast off. That's what I want to see, right? And I'm not going to be giving anything up for that, right? I'm going to be waiting for that because I know that if the market's going to do it, it's going to do it, and it's going to either tap me, not tap me, but it's going to play those lows, right? So I'm just watching and I'm reacting. I'm not predicting. So after seeing this and after seeing how fast we were moving to the upside, it makes me think maybe this isn't the high resistant run that I want to see back to equilibrium to then go ahead and give me that short model to the downside. Maybe it's not that high resistant run that I want to see, right? Because looking at the low resistant liquidity, I want to see this move slow and lethargically to the upside, then give me that change of the state and that manipulation at the highs and accumulation of the, distribution to the downside, right? That's what I want to see. However, I don't see it. And on that low resistant move to the upside, what we end up seeing is a 5-minute change in the state. And I'm like, hold up. Now we have a 5-minute change state to the upside. I don't want to fight order flow. If order flow is showing me it's bearish and we have an internal model in this area right here, keep in mind, check this out, right? Change in the state, we have this high right here. This now becomes an internal model, right? So just marking this out with the curve just to show you guys what we're looking at, right? This is the sell curve and this becomes the buy curve all the way over here, right? It's a small model, but this is a model, right? So look, we get our change in the state. We get a we get a fair value gap right here. And I'm like, okay, maybe we could long, but I don't want to short. I just don't want to short. I just want to watch this, right? So now looking at this, let's look at what ends up happening. Zooming to the 15-second where the model is clear. We're seeing some kind of manipulation down right at macro time, by the way. Right at macro time, 1050 macro, 1050 macro, my best friend. Right at macro time, we end up seeing a manipulation to take these lows, tap into this fair value gap, right? And I'm not watching this for value. If you're wondering why I'm looking at this fair value gap, I'm not looking at this fair value gap like I want to see price tap into that. I'm simply just looking at what price did, right? So coming back, I'm watching the manipulation lower on NQ, and then I'm watching it on ES, and I'm saying, hold up. ES hasn't taken any of these lows. These are still intact on ES, but NQ has, right? So if we look, that's an SMT divergence wherever you want to market. There's an SMT divergence in the market. And even though it's not a SMT divergence on a very clean low, the only one that we're watching, this is a show of relative strength difference where NQ is showing that it's being weaker for a time, and we can expect that to be manipulation, right? ES is showing that it's stronger, so do what you want with that information. For me, I use that weaker moment on NQ to then be able to find an entry with a better RR that took me to my take profit, right? That's what I used it for. So after that, I'm looking to see inverse fair value gap, change in the state of delivery, all that good stuff, right? The fair value gap gets put in right here on this manipulation lower. And I'm waiting to see this get ran through. However, it doesn't. We go manipulate one more time. And what do we do on that manipulation? If you look, we place in another SMT divergence. So now we have external and internal SMT divergence. That's two signs of manipulation to show that this model is potentially very high quality, right? So what I end up seeing tap, change of the state, inverse value gap, boom, and change of the state happens with that full candle closure looking very nice and strong. I don't care that it didn't close perfectly over the wick because, bro, I'm not looking for that perfect market structure shift. I'm looking for that strong change of the state, right? So when I see that, narrative's perfect, aligning, manipulation, I simply place my order right here at the change of the state, stop at that low, and I target this internal model high, right? So I believe it was a little bit of a better entry than this. I'm not sure exactly where I ended up taking it, but I know it was a better entry than this. I might have taken it on the fair value gap, I think. Something like that, right? So we end up getting tapped. Oh, no, it was right here. Hold up. Yeah, right here. It was literally the best possible entry you could have gotten. Taps right on this because this was the real change of the state. This was the best possible entry. Zero drawdown trade. Tapped and it just ran, right? So this would have been the first take profit right here. Is this high, right? Now, I'm in class, mind you. I'm in class. I'm in accounting class sitting on the school Chromebook. Watching this play out. They're teaching us about some kind of debits and credits, right? I'm watching this and I'm like, hold up. I can't be sitting on the Chromebook and micromanaging this trade, right? So my teacher's going to tell me to hop off if I don't chill out and do this quickly. So I'm just going to take this first internal high. I'm just going to take my low hanging fruit, right? Now, I took this and I'm happy with that. I took my piece of the pie and I left. I'm happy with that. Look how, zoom out. Just zoom out right now and watch this. This is what I made today. And this is what I'm happy with. Look at all that. Look at what that is. I can live on, anyone can live off of that right there. I don't need to get the entire run. However, if you look, what the system sets you up for is if you have time, if you're in the right position, you can leave runners, right? So the runner for me would have been first internal high, next external draw. Then I would have been looking at standard deviation levels. So if we look, fib retracement, let's just draw it out right here, was our lower time frame manipulation, 2, 3. This is 3.5. It ends up getting tapped right on that same leg, right? That shows us that's where price wants to target. If we want to draw another one, because I always like to draw multiple because we never know which one price is going to respect. We see 2 to 2.5 getting respected pretty much here. So you could have taken a second there. You could have also looked to see this one, which I thought was probably the best indicator of today because 3.5 and I believe, hold on, let me zoom out a little bit. Yeah. So this external high right here was right around 3.5 and 2.5. So yeah, right around 2.5. This is where you would be able to leave your full runners to. And if you would have, I mean, dude, this bangs, right? So that was my first trade. Super happy with that, right? Now I'm not wanting to trade. I'm not sitting on the chart looking for another trade just because I didn't leave full, like, balls to the walls, home run runners. I'm not sitting there like, bro, I should have traded. Let me show you guys the next trade that I took. All right, next trade. Let's look at what happened, right? So price continues to just pump and we now showing us, since I'm reacting to price, when I opened the market at this point today right here, I was not expecting price to go ahead and take this high, not at all. But I'm watching, I take in all the data that's given to me, right? So I'm watching and I'm watching the market pump, pump, pump. It's a very simple concept to react to the market and it will save you tons of money because now I'm not focused on predicting. I'm not focused on predicting where price is going, what it's going to do here, what it's going to do there. I'm watching and I'm saying it looks pretty evident to me that at this point in the chart, I'm looking like, bro, we are looking pretty bullish. I'm expecting us to go take this high, right? Aligned with my standard deviation levels, aligned with the market maker model. Everything looks great to go take that high, right? So what am I doing? I'm waiting for some kind of pullback, and only if it looks good am I going to take it, right? So at this point right here, we have a pullback to a 15-minute fair value gap, right? And if we look, 15-minute fair value gap gets tapped. So I marked this one out right here, 15-minute fair value gap. Boom, pulling that over, zooming back out to the 5-minute. We see this range right here, which we come back, and I don't know if we did end up tapping equilibrium. However, we got super, super close to equilibrium. Yeah, so no tap of equilibrium. And what I was watching, right, is I'm watching to see some kind of a retrace and then a internal model play right to the upside, right? So I'm just simply watching. I'm being super conservative to see if there's anything that interests me to potentially want to take, right? So just watching. I'm zooming to the 15 second because I'm watching market structure. I'm not necessarily looking for the first change of state, the first this, the first that. I'm just watching market structure. This small insignificant move is where I took my second trade. It's really that funny because you guys think you have to get home runs. You don't, bro. what we saw was a SMT within the fair value gap, on ES. ES was in the fair value gap, NQ is not. We see SMT. I trade the stronger pair because it's more likely to take the high, especially on a scalpy setup like this where we're potentially looking to take low-hanging fruit or maybe runners, not fully sure, right? So I'm just looking, right? I'm watching SMT gets put in. We see displacement. I'm like, bro, looks good to me, right? So I wait. I get full displacement to the high. I don't just take it off the first chance state, although it would have worked. I'm waiting for the full displacement to give me so much confirmation and trust that this trade is gonna work because we're seeing displacement and we're seeing everything I need to see, right? Market comes back and it taps me. Beautiful, I love you, market. It then goes ahead, hits my high, and everything is great. I want to talk about how I'm trade managing, right? I'm risking lower on this trade because I already made a W, already made my money. I don't need to continue putting size. I don't need to overtrade, right? So I'm taking the second trade, and the second we saw this pump, stop to break even, bro. I cannot sit here and I cannot risk losing money on a trade like this that I've already been so much up on, right? It doesn't even make sense for the market to pull back, especially if the nature of this trade, right? If the market's going to pull back and stop me out, I don't even want to be in this because completely talking straight up, this is in line with my trading plan. However, is it the best idea for me to be taking a trade after I already won a good amount for the day? Like, it's not the best idea, right? So being able to go into this trade that I have conviction in, risk-free, is everything I need, right? And if the market comes down and it ends up stopping me out, right, pulls back to this level, somewhere down here, then I'm like, okay, I'm completely fine with that. Even if we do end up seeing a total swoop, I'm fine with the market stopping me out because I didn't really even want to. Looking at this now, it wasn't even the best idea to be in this trade because of the nature of the situation. However, the trade was fine and I'm fine taking it. That's the maturity and that's the mindset we need to have as traders, bro, because that will allow you to look at things objectively and be fine missing out on opportunities because of your unique system. You just have to let the system play out. And days like this will come where you're like, I wish I could have known this earlier, where I could have just paid attention to the system, not play games, not done this, not done that. You just pay attention to the system and all of this will come, bro. So overall, I think it was a super W day, super interesting day to just dissect price action. Today, the most important things stressed for sure were waiting for that extra confirmation, that displacement through the high, and just seeing if the market does want to pull back. If it doesn't want to pull back, no problem. I'm not going to get in the trade. Maybe my prediction was right, wrong. I don't mind, right? However, waiting for the market to displace gives you that extra confirmation that you like as well. That's in line with reacting. I'm not predicting. I'm not taking it the first second I get my breaker structure, my change of state, or my entry pattern. I'm waiting. And I'm reacting to see if my bias was right and my bias was wrong. We trade algorithmically, meaning that if what I think is correct, if I think the market's going to go lower, we're going to see a break through that low, and I'm going to be able to potentially look for that retrade, right? If I don't see that, there's no problem because I understand that I'm trading algorithmically where if the market's going to do it, it's going to do it, and I'm going to be able to react to it, right? And then since I'm waiting for the extra confirmation on top of the confirmation on top of the confirmation, it's incredibly likely that my small take profit and my low-hanging fruit trade gets hit. That's why I love the way I trade and why I can get such a high win rate. However, other traders don't do this, right? They simply wait for the first bare minimum confirmation to hop in the trade because they feel like they have to trade. They want to trade. They feel like they have to trade. You have to get rid of this. You have to feel like, I'm okay not trading today. I'm not trading for another week if it means there's no great setups in the market, because I'm not going to trade based on when I want to trade. I'm going to based on when the market tells me my setup is there and I want to trade. It's that simple. That will save you so much money. It will make you so much money, and that's it. That's really it. So the two lessons from today: react, not predict. If your bias is right, the market will show you the bias is right. If it's going to run a high, it will show you it's going to run a high. If it's going to sweep the high, it will show you it's going to sweep the high. Don't force it. Don't make your mind paint the picture different than it's actually being painted on the chart right now. The second thing, wait for that displacement. Wait for the extra confirmation and entry model before just taking it with the bare minimum, maybe skipping one confluence, doing stuff like that. Don't do that. Wait for that confirmation. These two things, definitely the lesson the market wanted to show me today. What did the market want to show you guys today? Drop it in the comments. If you have any questions, go ahead, drop them in the comments. We'll be the first to answer. Thank you guys so much for watching the video. Hope you guys learned something from this today. Without further ado, I'm going to let you boys go. Peace out. Have a good one.